obviously looking at it, we are still in this upward momentum. Now we are still in this upward momentum, and looking at also here on the daily time frame. Let me just remove this. Okay, looking at here on the daily time frame, I understand that price would have broken above this previous resistance area, broken above here and came back, now retesting, and you can see this beautiful hammer or this candlestick here on the daily, which represents that I'm seeing this candlestick on a support. Obviously that's a big buy, so we're seeing price maybe go a bit more to the upside, but we can't just do that and think we already have a trade. Obviously we need to now go a bit more deeper, like we need to analyze the charts, go a bit more to a lower level and see what price is actually telling or showing us. So with this right here, okay, so just by having my trend line go all the way from here all the way up until here, I may even remove this. It's okay, these are old structures that eventually did play out, but they are old structures. So on my 4 hour I can just have my management line to see what actually is going on, and I can see we've got here our first touch, our second touch, and right here being our third touches. We are now at our third touches on the 4 hour, which makes it much more valuable because we are now on the 4 hour. Okay, so what I'll do is that I'll just filter this out so it only shows on the 4 hour, only on the 4 hour, it doesn't show lower than the 4 hour. And what I'll do is that I'll be going to the 60-minute time frame, and when I get you on the 60-minute time frame, obviously I'm looking for what price is showing me. Is it corresponding to what I saw on the 4 hour, or is it actually going against me? But just by having this BR, I can easily even just update it to right here and right here. This makes perfect sense because looking at it, guys, if you know your charts, you can see that this is a simple left shoulder, boom, head, boom, right shoulder, right here, right shoulder. So with this being said, it means that there's a high chance that price is coming all the way up to here. Okay, so now we can even see that with how prices I'm giving us this beautiful left shoulder, right shoulder type. The best ways that we can go about it is either like waiting for the neckline to break up above and taking this buy, which is a much more safer entry. It's much more safe because you're waiting for confirmation, then you're buying after confirmation. But as well, even if that doesn't happen, you can easily just take a much more riskier trade, which means that you can enter here, take a stop loss maybe here, and take profit here, which is going to increase more risk to reward. You can look at it 5.7. But I was actually reading a book, Market Wizards, and one of those great guys, it's Richard Dennis. What he mentioned is that in the markets, for him to have stayed, he's been trading for over 40 years, so it's like over 50 years actually, for him to be as successful and for him to be long in the markets is the fact that he was honest enough to put a stop loss peak. Because obviously for us, such stop loss, they work 5.7%. It's very stop. But that guy was for him to actually, he puts the stop loss where he knows the market shouldn't go there. So that way he has an edge over the markets, meaning that there's a high chance that he might, let's say you have a stop loss maybe somewhere here type thing. Do you get that? And obviously risk reward, it will be a bit less. But even if price retraces and does whatever, he'll still be in type thing. So that's how he sees the markets. Instead of having a tight stop loss like this and being out and doing all those things, for him it didn't make sense. But we are all different types of traders at the end. He's gained success doing that, but it doesn't mean that you are gonna also gain success doing that, but you can gain success doing that. That's one of the ways that you should learn from experienced traders. Okay, so now on US 100, okay, US 100, so you can easily see that it's almost similar to the same. So normally on the daily, if we saw buyers on indices, then US 30, US 5 and the more likely are going to be same type of thing. But looking at this beautiful situation that we're in now, price has been pushing upwards, all the way upwards. You can see this beautiful upward trend. Okay, all this beautiful upward trend. And as well, price broke above here at the resistance. Let me just clean this up. Price broke here at the resistance. It broke above impulsively, and now look at this coming back to retest. So obviously just by going all the way down to the 60-minute time frame, just by going all the way down to the 60-minute time frame, one thing that I was able to spot is the fact that yes, right here we had this beautiful pattern that eventually just broke out. Okay, let me remove this as well. We had this beautiful pattern that eventually broke out below, but the way that it broke out, it started moving in a corrective manner, which now shows that there's a high chance that we can be looking for something else. So something else in this scene would be like buyers, and I highly believe that the market could be ready any moment from now, because look at this, it broke below, and once it broke, it done this falling wedge. So in this being a falling wedge, and look at this previous resistance, it broke out. now being support, obviously this is a perfect buy position. Perfect buy position, and it being a perfect buy position, it means that obviously your stop loss is here. And truly speaking, it's the same thing in terms of risk compared, I mean, in terms of what we saw on in head and shoulders, because you can see we have our left shoulder here, our head right here, and then our right shoulder right here, you can see. Okay, so obviously with this, you have your stop loss be if you want to be on the safer side, and take profit here, which is a 4%, but we're going all the way up to here, which is over 6.3%. But this trade is ready. It's actually a trade that I can share in the private team right now because it looks as ready as ever. And remember, we are starting a week, so the most important thing is to start a week with a cleaner mindset, and as well start the week fresh. So you shouldn't be focusing more on trying to make as much as possible. In fact, when I start the week, I trade with very small contract sizes, because that way it allows me to be prepared for anything that can happen to me throughout the week. And it's better to end the week strong than to start it, you know, strongly in negatives and trying to recover. It's better like, you know, it's, imagine starting the week in negatives and you working the whole week, you are focusing more on recovering instead of making your profit. Shouldn't be that way. Back down to, like, you know, how we see things. Like, obviously when there is, if we're seeing a buy like this, there's like a higher chance where the odds can be with us, and you know, when we are seeing better risk compared to reward, buying compared to selling. But it makes perfect sense as well if the market doesn't go in our direction, for you to see that there's a possible scenario for a vice versa type thing. So what I mean is that, like, you know, obviously if the market doesn't go above and then maybe it breaks below and then it comes back and retest this as the resistance, then obviously it means that now you should be looking to sell, even though it can be a short term, maybe up until summer year. But you shouldn't just focus more on that buy, unless maybe it didn't break below here, it's still just playing around there. Then obviously you can still continue looking for buys. But if it breaks below, then you need to now change your mindset or change your bias in terms of what you're looking for. So don't always just focus on one thing. Allow the market to continue, like, you know, moving in its direction, and you just continue to evolve. You have to just continue evolving with what price or structure is telling us at that time. But let's now look at GBP JPY. It's been a while. Okay, let me start from the daily. So you can see on GBP JPY what we have here is obviously price it's moving upwards, but in a ranging way, because you can see price is actually ranging between here at 148,000 level, 148,800 level, and also just there by 171 level, 250, somewhere around here at these levels there. So that's where price you can see in the last over in the last 2 years. But going to the 4 hour, so like I did say, this being the impulse, now we are in a corrective phase. So with this correction, let me just clean this up and then use this to just identify what type, where are we actually going with this bigger pattern. What is this pattern trying to tell us? Okay, remember, you should just allow patterns to show or tell you, then from there make a decision according to their statistic, using that. And you know, that's much more better, because you can see this impulse, this correction. So what my understanding of this is that you can easily see that we are now also on the third touch here, third 1 2 and third touch here. So either two things can happen. Scenario could be either price can respect this third touch, go all the way down to here, give us a third touch, and then go back a bit more to the upside, and then from upside maybe we can see it come down. But I don't like forecasting that long, because anything can happen. First of all, this scenario, we're not even sure if it can happen, so we can't really focus on more future movements. But if that does not happen, then we will see price just maybe breaking above this resistant area, coming here maybe for a third touch, 1 2 3 third touch, and then now coming all the way down to here. And then from there we can maybe see price break, also continue going downwards, because looking at this beautiful pattern, there's a chance that this pattern should break to the downside. So we will use that, we'll use what the pattern is telling us. But obviously when that moment comes, we'll observe what actually goes on. But normally with these patterns, what they say is that, you know, the length of this first impulse is where the take profit is going to be at. And we used this method to actually catch a big trade last week. So yeah, and we actually even did take profit on it, like using this method, because looking at it, you can see that touches here. So it basically says that our next take profit is here, which price has been here in ages, so you have to hold it, you can see, which is exactly at the support. But we don't know how long it can take. That's the thing, you don't never know how long it can take. So you use this in order to just time the markets, but as well you become smart about it and you make money out of those movements that you already spot. Ne? So going all the way down to the 60-minute time frame. There we go. Okay, 60-minute time frame. Right here. There we go. I just had to clean this up. Okay, perfect. I can either have it like here, or I can just evolve it. I'm more likely to evolve it because I love clean structure. That was like previous week, but now I just love clean structure, so I'm more likely to have it like this. You can see first touch, second touch, third touch here. So truly speaking, guys, I'm seeing a sell over here. Having my fib, yeah, so on level, I'm seeing a sell here, but this will be a short-term sell, and maybe up until here. Wait for candlestick confirmation. Have your stop loss just be above this previous lower high. Take profit could be here. First take profit right here at the support 3.7, which is amazing. But as we go, we will evolve. We can also still come back here 7.9, and from here that's when we will get that bigger sell. I mean that bigger buy. When you get here, you can either go all the way up, or we can just eventually just continue breaking, going below. But I'm seeing this sell happening on GBP JPY. Okay, going all the way down. So I just have to remember these setups because I'm gonna have to send them out as setups. Okay, I'm gonna have to send them out as setups. But USD JPY. Okay. USD JPY. Let me just come back down here on the daily. It's been a while since I looked at you, so obviously I need to start you from fresh. Okay, but this is clean, truly speaking. Looking at this, I'm seeing a beautiful buy already. But yeah, I'll just show you guys what I mean. But on the daily, I'm seeing a buy. Okay, price is moving downwards, though. You can see prices been moving downwards up until we reached somewhere around these levels here, and price couldn't break below these levels, so now it's starting to go back up. And the reason I'm saying I'm seeing a buy is because of the fact that, look at this, price has been moving up downwards correctively, and after moving downwards correctively, you can see when it reached here support, it broke above now this resistant area, and it came back to retest this as support. And look at all these perfect testing, guys. Also, if I may just put this as resistance, now support, look at this. So price is most definitely going up all the way up until right here, all the way up until right here. Okay, but how do you go about it? Obviously, we're not trying to just be analysts. We need to actually be able to profit from such moves. How do we spot this? So how we will go about this is obviously just by having our clean structures right here, being able to just identify this level, some sort of support, which supports price from breaking below and going all the way to the upside. But looking for entry, it means that we just have to dive a bit more deeper and look at our patterns. So far I'm seeing this beautiful pattern, a flag that's being printed right here. So obviously, if you are studying these patterns, you'll be able to see them even without drawing them or analyzing or putting them on chart. That's how I can see them. So I see this impulse, this correction, the next impulse coming up. And with this being said, obviously I'll just wait for price to come maybe somewhere around here, retest. Maybe I can take an entry. This is a bit too much for I'll look for a smaller take stop loss, maybe somewhere around here. And I know that I'm coming all the way to somewhere here, 1,000 pips with it. Depends on how long I'll be able to hold it though, man. But that is on USD JPY. Let me just go on the 60-minute to see how we go about that entry that we spoke or we looked at. So that entry, how it go about it is just waiting for price to come back and retest at least somewhere around this area, yeah. Because what my understanding is that you can't really just buy anyway. And if you are buying now, it means that you are buying at the resistance, because look at this, price is resistant to break. So if you buy now, that's a poor buy. That's a poor trade or decision. You rather have to buy here, because if you buy now, where is your stop loss gonna be? Your stop loss is gonna be far, like somewhere here. So at least when you buy here, when price is cheaper, and you can go up with it. Or if you are buying after the breakout happened, you're also buying it cheaper, because why? A price would allow you to put your stop loss anywhere between somewhere around here. Do you get that? So it's much more cheaper that way compared to an expensive price, whereby you're buying at the resistance where price is the most expensive at. And when you're buying here, your stop loss even is going to be much more greater looking at it. I have to also be comfortable with my stop losses, because your 50 pip stop, something else. But on the 1 hour, it makes sense entering from the 1 hour. So this could be those swing trades, you understand? Because imagine you catching like such a move. You've seen this head and shoulders, left shoulder, head, right shoulder, then you catch it maybe at the breakout here, you put a buy stop and a stop loss somewhere below, then it goes all the way up with it, all the way, maybe you take profit somewhere here.
And remember, in forex we're talking We came in this game for money. We came in this game to earn a living. So we are not here to play games.